Eric Muadh, Muadh.com. World market analysis for the weekend of August 13th and August 14th, 2016. Let's take a look at markets here, and we begin by taking a look at the Asian market at the close of Friday. Let's call it a nice day at the close of the week. Let's call it about a percentage gain for the major averages in Asia. Take a look at European markets at the close of Friday's session, and we have, let's call it an unchanged to slightly down day on Friday, pretty much unchanged. Take a look at the Americas here. We see that Brazil is down slightly, Canadian market is down slightly, S&P 500 with about 2 hours to go is down slightly. So a little bit of a mixed picture, but mostly slightly to the down as of Friday's action in the Americas and in Europe. Let's take a look at the charts. And the one thing we're going to see across most of the markets here is that it's very hard to be bearish in the current market environment. Very hard to be bearish, but there's some things that are developing on some charts that always caution us to be careful. So we begin by taking a look at the Australian market, and here we see again after recent breakout, nice breakout here on the weekly, we continue trading above that. So now there's a new challenge, which is the need to break out and continue moving higher. The level to watch here for the Australian market for a weekly breakout is a movement above 5,644. One wants to see a breakout above this level. Otherwise, here on the weekly, we can see a reason why this could become a pullback territory, because if we come back to the recent break on the weekly off the highs of last year, so this break here, we can even draw it there, is what is being tested. So as far as the Australian market is concerned, without a breakout in price, we can see that the weekly is already suggesting that we should not be surprised if we start seeing a pullback pretty much after a nice move off the lows of February, probably coming back if we don't move above this level on the weekly. This is a level where we can start looking for reasons why the market will start pulling back. And again, that pullback doesn't have to be destructive. It just means a pause in the nice positive momentum recently. If you take a look at the monthly for the Australian market on a long-term monthly basis going back to 2002, one thing you're going to see this, and it's going to be on many other charts, is on the weekly, there seems to, on the monthly charts, seems to be a lot of resistance levels that the markets have to contend with. You can see for the Australian market, you take the highs and draw a simple straight line. We've come back to test this line that has been resistance over a period of many years. So if we cannot move above this level, then obviously it suggests that we should not be necessarily bullish without having some idea that the market could pull back. Just based on this resistance line, this is strong resistance. If we cannot move above this level, one can expect that pullback to begin at any time on a month-to-month basis, not necessarily on a day-to-day basis. Also, there is a back test of this recent break. So you take this blue line, ever since we moved below that line, the market has pulled back, which is this off the highs of 2015. If you extend the same blue line, we are coming back to test it. So we got two lines converging there. We got the blue line showing back test resistance for now, and also we got the top side resistance coming in play. So as long as the market is struggling on those two lines, we have to assume that the next meaningful swing trade is lower, unless the market can figure out a way of breaking out above those two lines. A breakout would be good for market bulls, because that clearing of that resistance would open the door for higher price levels. If you take a look at the Chinese market, it too needs to break out above a recent weekly closing high if it is to attract buyers. So this recent weekly closing high is a breakout level to watch. Anything above that weekly close, and the price level there is 3,054.30. A breakout above that would be bullish. Otherwise, failure to break out might be a problem, because the market here, as far as the Chinese market is concerned, has been struggling lately to stay above the 50 level on its weekly RSI level. All these have led to pullbacks, as you can see. And so here again we are back to this general RSI 50 level, which has been a problem. So failure to move above this 50 level, if this becomes resistance, then that might suggest around here we can start expecting a pullback. So a breakout is needed. Otherwise, this might also be an area where without a breakout, the weekly RSI confirms resistance and we start seeing the market drift lower. If we take a look at the Japanese market, we can see that the Nikkei, having a nice close of Friday, is coming back at the very best to test the recent break on the weekly. So you can see the break here of the highs of 2015. We can see that we are pretty much at best coming back to test this level here. Of course, that level was resistance during this period right there. So even at best, this chart shows that the weekly chart has a lot of work to do if it is to see higher prices. So here there's I guess a confusing point of view. The weekly shows some type of resistance, probably eventually going to point down. But take a look at the monthly. The monthly continues to be very strong, because if you take a look at the long-term monthly chart going back here to 1990, we can see that it gives us a nice bounce area on the weekly, on the monthly, ever since this breakout. As we've been discussing, once we moved above this level, the market went on a nice strong run. And so we've come back after a period of months to test that level. The market held, as you can see, and that was with good double bottom support on the monthly RSI, suggesting that the next big month-to-month move for this market seems to be pointing higher. So weekly charts a little bit suspect, but here on this one we can see that the monthly charts continue being strong, especially now that we are moving the monthly RSI above 50, still suggesting that month to month these markets have an opportunity of moving higher. If you take a look at the Nifty, you can see here that the Indian market does require, if this is to see higher prices in the current market environment, the weekly RSI does need to move above 69.1. Otherwise, failure to hold above 69.1 on the weekly RSI might suggest resistance around current levels. Keep in mind, we are coming back to test the actual break of the highs of 2015. So you can see this RSI break in 2015 led to the market coming off the highs right there. And so we are coming back to test that break level. So if the RSI moves below the red line and also again confirms resistance around 69.1, then one can expect that the next swing trade based on this weekly chart is lower. At the same time, if the RSI can move above 69.1, that does change the equation and it goes back to the market pointing higher. So I guess in the coming week we have to see whether the market can stay above 69.1 for continued move higher, or confirmed resistance at this level, suggesting that now we start looking at markets to pull back. Now the one thing here, if we take a look at the long-term monthly chart for the Nifty, we'll see that we've come back in a level on the chart, on the monthly chart, especially if we turn negative for the month. So right now we are slightly positive for the month, but if the markets turn negative, this might not be a good area. As you can see on the long-term monthly RSI, once we broke through this level on the monthly, the market came off the highs of 2015, and right now if the market turns red for the month, this would be confirmed resistance. The problem here is that if you test this line or this level and actually go backwards, keep in mind that this level so happens to be at about 61.8 on the monthly. And if you go back and check, you'll see that most of the major drops in the market over the last, let's call it 25 years or so, come around this level. Here you can see resistance. Once we moved back below 61.8, the market made a short-term high. We had a pullback in the years here of 2010, 2011. Again, we see the break of the highs of 2008. Once the market broke down here, we had the bear market move of 2008, early 2009, and go back to this break here for the highs of 2000, and the market pulled back. as you can see. So if you just test this level, and again resistance here in 97 for the highs there, the breakdown here in 94 before the bear market of 94.95. So we see here that the big picture problem here is that if the market confirms resistance around current levels on the monthly, this might be a problem spot for the Nifty. Short term on the daily looks good. That's all I can say. If you take a look at the daily based on the support of Friday, after Friday's positive gain, you can see that the RSI on the daily is showing support on this line based on recent support area, based on the lows here. So the market did find support, so the daily looks good. So as long as the daily is showing this RSI trendline support, the market continues to act well. It's only until when we break below this line of support that we can start looking for the market pulling back. So short term looks good. If you take a look at the bank Nifty, the banking sector, as far as the Indian market is concerned, we can see also on the weekly we are coming back, and we do need to clear this resistance level here at about 1900. Otherwise this might be a trouble spot. The market needs to clear that level. It's been digesting gains around here over the last couple of weeks, but for this to be a truly an area where the market eventually moves higher, it needs to move above that 19,000 level. The reason why I say that is we can see that this could easily be a trap zone based on the previous resistance levels of the highs. So we go back, figure out where the break took place. Once this break took place in early 2015 of the intraday highs here, we draw a line from there. Should be something like that, and you can see we've hit this line once before with uniform activity for the highs on this week. We haven't been back to those levels, and right now we are showing resistance on a week-to-week basis on this same red line. So failure to move above the red line on a week-to-week basis might suggest that now the equation is changing and that the next meaningful swing trade for the bank Nifty is lower. In fact, if you take a look again at the long-term monthly picture, we can see that if we draw a line at about 61.8 on the monthly, all data monthly for the bank Nifty, draw a line somewhere around here. You can see that this has been critical in giving us major sell signals. For example, here for the movement of those highs, a break here for the movement of the highs there. Here in 2013 for the movement of the highs here. We broke down here for the movement of the current highs here, and now we are back in this general range. So we can see that if the market is to see higher prices, it needs to be trading above that red line. Otherwise, failure to move above this level and resistance on the red line might suggest yet again that the meaningful direction here in the coming months could be lower if resistance is confirmed. But to be consistent with the Nifty itself, take a look at the daily chart. Daily chart looks solid, looks good, having come back to test the recent movement to test the 50 level. If you take the daily RSI 50, it's been bouncing nicely with uniform activity each time it comes to this level for move higher. So all these have been successful in holding the market steady, and here we see a nice double bottom over the last couple days, and as long as this is holding, as long as the market is above this level, we have to assume that the market continues to be healthy. Let's take a look at some European markets. We begin by taking a look at the French market here on a month-to-month basis. The long-term picture continues to be solid. Take a look at the monthly here, and the reason why I say that is if you go back, take a look at the, let's go back about 13 years on the monthly for the French market. What we see here is the market is coming back and bouncing very nicely on a level where it should bounce. So based on this entry here on the breakout level in 2012, the market moved above this RSI range. Prices moved higher. We haven't come back to those levels again. So that was a good entry on hindsight. So we use that information, and we can see recently it came here and bounced precisely where it should bounce. So month to month, we can see that this market continues to act well, and could actually be setting up month to month to move higher. And until it breaks below this green line, we have to assume that month to month this market looks, at the very worst, it looks stable. And this is consistent with the German market. Here you see the German market also coming back to test the RSI entry, let's say, of this movement in the RSI of the lows of 2012, 2011. So we draw a line from there. And you can see again, we've been bouncing on this green line for the lows of 2015 and 2016. The market has done the same thing over the last couple of months, and you've seen a nice movement higher. So month to month, the German market also continues to be solid. Having said that, take a look at the FTSE. You can see here that it is coming back to test the top side of its monthly RSI going back to 2007. So this could be a problem right here. If this resistance continues and is confirmed on a month-to-month basis, this is where you'd expect the market to stall. Keep in mind that if you take a look at the movement of these highs here in 2007, this corresponds with this break, the break in the RSI here, late 2007, early 2008, led to this major drop. If you draw a line from there, something like that, you can see that we are also coming back to test that red line. So month to month, the market needs to be above those two lines. Otherwise, this might be a problem. Also, there's another way of looking at this, which is a back test. Take this break here, this recent break in price, let the market off the highs. So we can see that we are coming back after, since breaking below here, the market hasn't been back to these highs. And so we can extend that line. And right now, again, you can see that we are coming back to test that level on a back test of that same line. So if the market cannot move above that level again, so you see that there's three lines that are coming and converging right now. So month to month, this becomes a problem. Looks like we might actually stall around here unless we can clear this resistance. Now, this is not the only market that is showing potential for monthly charts to be a problem in the coming months. Take a look, for example, at the Canadian market. And what we see here is, again, the same type of analysis. We are coming back essentially to test what has been a problem area on the monthly, given the recent highs. So take a look at this break of the highs of 15. So once the market broke below those levels, we haven't been back to those highs, and right now we are coming back to challenge that break point. So if this is confirmed as resistance month to month, becomes a problem, we start expecting a major pullback in the coming months. Otherwise, bulls would like the market to clear that very well defined line of resistance. So we need this to be broken to the upside for those who are bullish if the market is to see higher prices. Otherwise, around here, this becomes a trouble spot. Keep in mind, again, if you test the same level, and again, keep in mind, to be consistent with the other charts we've looked at, this so happens to be at about 61.8 on the monthly. Take a look at the breaks recently here. Break below 61.8 of the highs there led to a major pullback. Here, resistance with uniform activity at 61.8 and back below it for the highs there in 2008. So this is a serious area where the market needs to clear this level. Otherwise, we start seeing a major pullback. As an example, take a look at what happened when the market moved above that red line during this period. We saw the market have a nice sustained move to the upside. So we need something similar. Otherwise, this might be an area where the market starts stalling. Again, to be consistent here, take a look at the Brazilian market having a nice showing, BVSP here. And we see that it is coming back on the monthly to test what has been a problem. Here, there was a break in 2011. We draw a line from there. This is well-defined resistance consideration levels. Ever since this break, this has been where the market has been rallying to this level, showing uniform activity rejection and price rejection there. Uniform activity rejection and price rejection. And again here, uniform activity rejection. And this could also be where if the market turns down for the month, we might start expecting now, after a nice move off the lows, that the market now is coming back to a level where it could store. So off the lows here, nice rally, but the RSI is suggesting this could be an area to watch. Keep in mind this red line again happens to be at about 61.8 on the monthly chart. Otherwise, for now, on the weekly continues to trade well, having seen that the weekly continues to hold above 69.1, which is a sign of momentum. So we have to let the markets run their course. Here, there's no need to turn bearish. Like I said, it's hard to find reasons to be bearish in the market. All we see is lots of signs that the market, yes, could eventually stall on the monthly charts. But short term, take a look at this chart here for the Brazilian market. Ever since it broke out recently above this level here in July, this nice movement in price, the market has come back to test that breakout level successfully, showing recent double bottom support on that line. So net, the market continues, and this market and other markets continue to be at the very worst sideways. Of course, if the monthly charts turn down, month to month, we might turn bearish. But net, take a look at markets like the Nifty on the dailies. This daily chart does show that the market at worst, they are sideways, and at best, they are absolutely bullish. So make sure you have stops, of course, but very hard to find outright bearish situations right now. The markets, again, as I said, at the very worst, they are sideways. And for now, you have to remain at least expecting markets to be sideways or moving higher. Monthly charts have to turn negative for the month before we can start using them. So keep in mind, as long as monthly charts are not negative for the month, there is no need to turn bearish. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. Blessings, 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 riches, blessings, blessings.